Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Weekend Review where I talk about current events for everyday investors and home buyers. Our topics for this week: topic number one from One News on the 4th of December, stable property prices help fuel Goldilocks market report. Topic number two from the Mortgage Mag on the 5th of December, Bank of Mum and Dad alive and well. Topic number three from New Zealand Herald on the 4th of December, Commerce Commission investigated Valocity over competition issues among valuers. Topic number four from interest.co.nz on the 3rd of December, Barfoot and Thompson's sales and selling prices both headed higher in November, but the agency has a mountain of stock to deal with. And topic number five from Corelogic on the 5th of December, holding pattern continues for property values in November. So first up for this week in review from One News on the 4th of December, stable property prices help fuel Goldilocks market. The New Zealand property market's currently experiencing a balanced phase, described as a Goldilocks market, where conditions favour both buyers and sellers, according to a report by realestate.co.nz. November data shows the national average asking price remained steady, marking nearly 2 years of prices ranging between $850,000 and $890,000. Property stock reached its highest level since April 2015, with almost 34,000 homes listed nationwide. This stability is complemented by a rise in new listings, signalling a return to typical market conditions after the volatility of 2023. Realestate.co.nz spokesperson Vanessa Williams attributed the stability to factors like falling interest rates and reduced political uncertainty. She noted that the market's gradual recovery offers confidence without dramatic rebounds. The national average asking price in November was $846,150, reflecting a 2.8% annual and 1.1% monthly decline, aligning with the lower end of the 2-year price range. While Central Otago, Lakes District and Wairarapa recorded price increases, regions such as Bay of Plenty, Marlborough and Wellington experienced declines. Williams emphasised that the current market dynamics provide a rare moment of stability and opportunity for all participants. My thoughts on this is that we're very much still in a buyer's market with the abundance of listings and not too many buyers in the market at the moment. There's some really good opportunities for both home buyers as well as investors. Topic number two from the Mortgage Mag on the 5th of December, Bank of Mum and Dad alive and well. A recent Kiwibank survey reveals that nearly 1 in 3 parents can afford to help their children with mortgage borrowing, with 31% of parents supporting first home buyers. Among younger homeowners, 65% of Gen Z and 43% of millennials have relied on parental financial aid to enter the housing market. Eureka Financial Services notes that while the Bank of Mum and Dad has become a vital resource for many young Kiwis, it is essential to evaluate its long-term viability and risks. Falling interest rates may make this a prime time for parental assistance, but families must carefully assess the financial strain on parents, particularly those nearing retirement. The challenges of saving for a deposit, exacerbated by rising living costs, highlight the importance of this support. Parents assist by contributing to deposits, offering loans, or acting as guarantors, enabling younger buyers to access more flexible terms and lower interest rates. However, these benefits can come with potential downsides, including financial strain on parents, family tension, and legal complications if terms are unclear. Eureka recommends creating formal, legally binding loan agreements to prevent misunderstanding and tax complications. Clear communication about expectations, loan terms, and financial impact is crucial to avoid family conflicts. Seeking advice from financial advisors or lawyers can help structure agreements and address potential legal and financial risks. Ultimately, with a thoughtful approach, parents can support their children's home ownership dreams without jeopardising their own financial security. I'd also add to this that if the reason for getting assistance from the Bank of Mum and Dad is because you don't meet the deposit restrictions from the Reserve Bank, you need to be very careful, because if there's legal documents describing how you're going to be repaying that loan, That is seen as a loan, not a gift, which would mean that you wouldn't be meeting the Reserve Bank restrictions. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as a financial advisor, and these events are available live online. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. Topic number 3 from the New Zealand Herald on the 4th of December, Commerce Commission investigated Valocity over competition issues among valuers. Valocity, a provider of property data and digital services, is updating its online property valuation system following a Commerce Commission's investigation into competition concerns. The Commission found that Valocity's practices, setting prices for full property valuations and determining which valuers conduct them, limited competition among valuers, potentially leading to higher costs for consumers. Under the Commerce Act, agreements that significantly reduce competition, whether formal or informal, are illegal. The Commission raised concerns about borrowers being unable to select their own valuer, as banks require valuations to be arranged through Valocity, which also sets the fees. In response, Valocity has agreed to modify the platform to allow the borrowers to reject the preset fees and request quotes from valuers directly. These changes, expected to be implemented in March, aim to enhance competition and provide more options for borrowers. If the changes satisfy the Commission, the investigation will be closed. Commerce Commission Chairman John Small emphasised the importance of a competitive valuation market which affects tens of thousands of New Zealanders annually. He encouraged consumers to explore their options for securing the best deal. Valocity founder and CEO Carmen Vitulec stated that the company disagrees with the Commission's interpretation of competition. She clarified that banks, not Valocity, select the valuers, and the platform only facilitates this process fairly and efficiently. Despite this disagreement, Valocity has collaborated with the Commission and welcomed the opportunity to improve its services, introducing greater flexibility and transparency for consumers and lenders. Valocity is majority owned by Anthony and Carmen Vitulec, with significant shares also held by members of the Holdridge family. The company reiterated its commitment to innovation and fairness in the property valuation sector. My thoughts on this is it's great to see some choice potentially coming back into the end user's domain. It'd be nice to be able to choose the valuer yourself, and being able to obtain quotes directly from the valuers is certainly going to help on the competition as far as pricing goes. Topic number 4 from interest.co.nz on the 3rd of December, Barfoot Thompson's sales and selling prices both headed higher in November, but the agency has a mountain of stock to deal with. Barfoot Thompson, Auckland's largest real estate agency, reported a solid performance in November, with sales and prices rising. However, the agency's record high property stock levels overshadow these gains, signalling a strong buyer's market. The agency sold 1,002 residential properties in November, marking a 3.4% increase from October and a 4.8% increase from November 2022. This is the first time sales have exceeded 1,000 since March, a typically busy month, indicating positive momentum heading into the summer. Despite this, sales remain 35% below the November 2020 peak during the last market boom. The average selling price rose for the second consecutive month to $1.132 million, nearly $1.133 million, which is a modest 0.3% increase from October. However, it remains 4.5% lower than November last year and 11.4% below the record high of 1.278 set in December 2021. Similarly, the median selling price climbed to $1,011,000, up 5.9% from October, but slightly down 0.7% year on year. Interesting to see the significant difference. of, over $100,000 between the average price and the median selling price. While these trends suggest a solid start to the traditional busy summer season, the agency's property stock levels paint a different picture. Barfoot Thompson had 5,711 homes available for sale at the end of November. That's an 18% increase from last year and a staggering 42% higher than the November 2020 peak. This is the highest inventory level for any month since 2011 and the highest for November since 2010. Compounding this situation is a decline in new listings. The agency received 1,782 new listings in November, which is a decrease of 24.5% from October and 3.2% from last year. Not entirely surprising, in my opinion, because a lot of listings came on the market in the previous few months. And despite fewer new properties entering the market, high stock levels still persist. So this offers buyers an abundance of choice and significant bargaining power. Like I said, still a buyer's market. Barfoot and Thompson Managing Director Peter Thompson noted that while strong November sales set the stage for an active summer market, the elevated stock levels will likely keep price increases in check. Buyers are well positioned to capitalise on the current market conditions. How long these market conditions will hang around is anybody's guess. Topic number 5 from Corelogic on the 5th of December, holding pattern continues for property values in November. In November, property values in New Zealand dropped 0.4%, marking the 9th consecutive monthly decline, according to Corelogic's Home Value Index, the HVI. The average property value now stands at $800,795, which is a 3.5% drop from a year ago, representing a decrease of around $29,100. Although still 17.7% below the post-COVID peak, property values are 16% higher than the pre-COVID level in March 2020. The results across major cities showed mixed trends. Wellington saw a 1% drop, Hamilton declined by 0.5%, and Auckland fell 0.4%. However, Christchurch rose slightly by 0.1% and Dunedin increased by 0.4%. Corelogic's chief property economist Calvin Davidson noted that the market's in a holding pattern, with declines slowing from 0.8% per month between April and August to 0.3% in September to November. He suggests this could signal that the bottom of the market is near. Davidson, my opinion is we've passed that. January last year, the market's been pretty flat ever since then. Davidson also pointed out that lower mortgage rates, which are expected to continue into 2025, could stimulate the housing market. However, the ongoing availability of properties in a weak labour market may limit growth. While he agrees that the Reserve Bank's forecast of a 7% rise in property prices in 2025, Davidson expects it to be a modest recovery, given the depth of the downturn since late 2021. In Auckland, most submarkets saw declines, with the largest drop 0.8% in Franklin. However, some areas like North Shore experienced a 0.3% increase. Property values in Auckland remain 3 to 4% lower than last year, and some areas have seen only minimal gains since pre-COVID levels. Davidson attributes this to high property supply and the completion of new builds, though first home buyers remain active. In Wellington, property values saw significant declines, with Wellington City down 1.2% and values down 7% year over year. Davidson noted that job insecurity in Wellington is dampening sentiment, outweighing the benefit of lower mortgage rates. He suggested that the city's performance will be a key indicator in the market's recovery in 2025. Other regional areas also showed mixed results. While Nelson and Hastings saw modest increases, areas like Queenstown, Gisborne and Whangarei experienced declines. Davidson highlighted that while some markets performed well, the overall market remains in a holding pattern due to conflicting forces. Looking ahead to 2025, Davidson expects property sales to increase as mortgage rates decline and GDP growth returns to modest levels. Corelogic predicts that around 90,000 property sales will occur in 2025, slightly below average, but still an improvement from the previous 2 years. However, Davidson cautioned that the return of debt to income ratios, DTI ratios, may limit borrowing capacity, particularly for investors, despite the potential for improved cash flow due to lower debt servicing costs. At the moment, we're still not seeing too many people being limited by the debt to income restrictions, but obviously as interest rates drop further, we will start to see the DTIs being the one that will be the limiting factor. As the year comes to a close, there's no better time to invest in your future by learning about property investing. Register now for one of our final events for 2024 called How to Succeed with Property Investing. These events are available online. Whether you're a seasoned investor or just starting out, our free sessions will provide you with the essential tools and insights to make smarter, more informed decisions. Don't miss this opportunity to stay ahead of the curve and take the next step towards achieving your financial goals. In our free events, which will also continue, obviously, through 2025 as well, we'll tell you more about how we help our clients to achieve their investing goals. So if you're interested in finding out more about what we do, visit propertyapprentice.co.nz today and sign up for one of those free events. If you've already been to one of our free events and you'd like to know more about how we can help you on your journey, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website. And that's propertyapprentice.co.nz. Thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.